So the US dollar stages a rebound with upside pressure eyed once again with the key labour market data this week. Guys, Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. So the US dollar did stage a rebound last week with a big push to the upside there after two consecutive weeks to the downside. And what did I know on that last video? I was expecting to see the dollar stage the rebound this week as markets, look, at the end of the day, the macroeconomics are so strong, are so forceful in favor of the greenback, given, just put it into a nutshell for you, the divergence between the US economy, right, and other major economies is massive. The US economy remains strong. The FOMC remain hawkish right now. They're holding rates where other major central banks are cutting. And then, of course, we've got all the volatility of Trump there, where he's obviously announced tariffs now. We saw that on Friday, announcement of tariffs, and obviously those have been executed from the commence of February for tariffs of 25% on Mexican and Canadian goods coming in, and then 10% on Chinese goods as well. And obviously this is just him getting started. You never know how further this could obviously escalate, and especially with regards to trade wars, particularly with China. But anyway, dollar staging a rebound there. Now, let's have a quick refresher of our memories in terms of last week as well, because I want to just bring some things into perspective. Obviously, all focus was on the FOMC rate decision where they kept rates unchanged, as I said. One of the key things at the end of the day, inflation there's still risks of inflation. Also, the fact that the uncertainty of Trump's policies, right, with the tax cuts potentially coming into play, the tariffs that are going to be inflationary. So the FOMC had no choice but to leave rates unchanged. They can't go and cut rates because it'll only potentially create a lot of inflation, especially if Trump, the filter through of the tariff effects and obviously the tax cut policies. And then we had other major central banks like the Bank of Canada cutting rates again, the ECB cutting rates again. So that's just creating that huge divergence in terms of interest rate differentials as well. People can seek a higher yield in the United States where the economy remains solid and sound. So there's no other option. There's no better choice, I should say. Obviously, not financial advice, but for a big institutional perspective, a big investment perspective, putting their money into the United States, into the dollar, where they get a higher yield and a stable economy. When you look here, GDP was slightly softer in terms of the initial figure, 2.3%. But the previous was revised higher to 3.1%, which is bullish. Unemployment claims are showing the labor market is still freaking tight. Core PCE with the Fed's third measurement inflation shows inflation is still sticky. The employment cost index, so the cost associated to employment, remains higher, okay, 0.9%. So again, all this is inflationary. Now it takes us on into this week, where obviously we're keeping an eye on the labor market figures, which we've had a solid run of labor market data, right? And throughout this week, we're going to be keeping an eye on JOLTS job openings. Last reading was good, okay? We've seen the last couple of readings good, decent amount of jobs being opened in the economy. ADP privately conducted payrolls, but obviously all focus at the end of days on Friday's figures, right? Average earnings remains buoyant, 0.3%. Obviously, we had a strong run. People are getting paid, decent wedge there. And of course, that's inflationary. People getting paid good wages. They're going to be spending, stimulating the economy. Non-farm payrolls, last couple of readings have been good. The labor market data has been solid for quite some time from the United States, to be honest, just to be very clear, okay? So I'm not expecting any downside or anything to change yet. And the unemployment rate expected to remain low at 4.1%. So this is all supportive of why, for example, the FOMC keeping rates unchanged, okay? Because it's all inflationary, the economy's still warm. So I'd like to still see dollar pushing to the upside. Obviously, as I said, we're looking for that to stage a rebound, and we did just exactly that. Nice big bullish candlestick there last week. And it just sets us up for some further buying pressure. Obviously, next zone we'll be looking at is obviously this mid 109 region, 109.40, and then obviously taking us into a run towards 110. So just sort of looking for that to work zone to zone, 109.40, 50 area, and then we go and challenge these highs. As I said to you guys before in previous videos, I would not be surprised if we go and challenge up at this 113, up at 114 area. I think the foundation is potentially there. These macros are so incredibly strong, and that divergence, as I say, between other major economies is huge. So I'd like to see further buying pressure for the dollar this week. Now we have another central bank decision, this time from the United Kingdom. We've got the Bank of England rate decision, where they are largely expected to cut rates this time to 25 basis points, taking a rate from 4.75% down to 4.5%. The vast majority of members are expected to be voting for this cut. So that's important as well, that there is a large consensus of members that wanted that cut. Okay, but it's likely for me, because one of the key things for the Bank of England, yes, the UK's economy's been softening. We've seen it, right? GDP slowing down okay, which is a key thing. We've had like poor growth, next to no growth in the UK economy. But the thing is, for the Bank of England, they want inflation down. Inflation's still a little bit sticky, especially services inflation. Remember, services, UK economy makes up services makes up over 70% of the UK's GDP, which is huge. So it's a big services economy. The fact services inflation is still sticky, which is why the Bank of England are probably going to be cutting gradually. Okay, I think they should be quite. One thing that could help the pound down, because if they just cut as expected, it's not really a massive negative because it's priced in. But in terms of their narrative, I believe they should be downbeat on the economy, because we are seeing softening. We are seeing signs of lagging, potential stagflation scenarios, as I've said to you guys in previous videos. So I'd like to still see GBP being vulnerable versus the dollar, specifically versus the dollar this week. There are other pairs to look at, but we're just, as I say, we're just measuring up as a base case GP versus dollar. Now, when you look on a weekly, we're still respecting structure, right? We've been going over this in our previous videos where we've effectively structure is very much bearish, okay, in the higher time frame. If we go to the monthly minute, obviously that remains downbeat to the downside. 1, 2, 3, 4 consecutive months to the red, to the downside. Weekly there, still respecting, as I say, that structure overall, really lower highs, lower lows. Okay, ran into big supply there at the psychological sort of 25 towards 2050 area. And for me, this just should be a free fall, in my opinion, down to obviously 23.50. And it's a case of just sort of working zone to zone again. Obviously, this was a previous key area of supply. Okay, so obviously we could be met with a bit of support here, but ultimately I'd like to see that working zone to zone in toward 23. And, you know, I wouldn't be surprised if we sort of challenge in the 20 region, you know, start challenging 120.00. In the coming weeks. Okay, so I still see some downside there, and it just goes back to one of my points that I noted for the dollar was that divergence. In the US economy is a bit more stable, or much more stable than the United Kingdom, and obviously we've got a bit of the Bank of England could be cutting where the FOMC are holding. So I still see GBP versus the dollar heading to the downside. So there's a lot of volatility around the Canadian dollar, especially now with these tariffs that Trump announced for Canadian goods coming into the United States at 25%. And obviously, as we know, Canada, and you know, in these previous videos, we've noted it for weeks now, just how vulnerable the Canadian economy is. We've seen a massive slowdown in terms of the labor market. We've seen GDP, poor GDP numbers. Growth is next to nothing, if not contracting in Canada. And then inflation's coming down. So why all of that has supported the Bank of Canada. They've been cutting. They've been one of the most aggressively dovish central banks in terms of the majors anyway. They've been cutting. You know, we had a couple of 50 basis point back-to-back cuts. And now, obviously, last week, as you see here, they cut rates by 25 basis points, which as expected. Okay. And now, obviously GDP, look at that. Contraction of minus 0.2%. And the numbers, just look at next to no growth. You know, the past few readings, just been bad run of data. This week, obviously, we're going to be keeping an eye on that key labour market data. And unemployment rate expected to jump up again 6.8%. Only expected 26.5 thousand jobs being added, down from last month of 90.9 thousand jobs being added. And obviously now with these tariffs as well, it's just further crippling on the Canadian economy, guys, really is. And I said to you guys, I keep saying about, you know, we've noted this for weeks, but look at dollar CAD. What did I say? So we've taken out that big supply area around sort of 44.50. Okay, we've still left this big wick here, which I expect that to be filled in the coming days, in the coming sessions. But we've had a nice sort of breakout. That was just more or less a bit of a retest there of this flag and this key zone. And I'm expecting this to just push. We might find a bit of support there around just dipping into that 25.00 area, 145.00 area. But ultimately, I'd like to see this working into that next key zone, as we've been screaming for a while now. It's the 2020 highs and 2016 highs. Okay, so I think this is a northbound trade for dollar CAD. And last but not least, New Zealand is an interesting one, because we've got a lot of interesting talking points around New Zealand dollar right now. You know, well, vulnerabilities, I should say. You've seen now with Trump's tariffs on Chinese goods, and initially it's just 10%, but obviously things could get a whole lot worse and a whole lot more of uncertainty. You have to remember, China is one of New Zealand's, or is the biggest customer. Okay, they consume New Zealand goods, its biggest two-way trading partner. So anything bad that's happening in China, obviously China could then cut back on what it purchases from New Zealand, because they're facing a bit of a crippling or a bit of a slowdown. So then they may cut back doing business with New Zealand as a result of that. So it's not good. So obviously with the RB and Z, these guys have been quite a dovish central bank as well. We've seen various cuts from the central bank. We've got key labor market data this week, which we're expecting a worsening in unemployment rates jump up this time to 5.1% from 4.8. Employment change expected on the quarter base still on a negative, obviously not as bad as the previous, but expected still a negative 0.2%. And it's been a hit and miss, the data of late, but definitely heading to the downside, okay? Which for me, NZD, USD looks vulnerable, all right? Obviously on a weekly with that dollar rebound. For me, it's one of the key things is trying to escape this range. I do really like the idea of, shorts once we get rid or break out of this range. Obviously, you could probably mark up a bit of a wedge sort of pattern here. But ultimately, I'd like to see this 55.50 area being broken down. And I think it really drops hard down towards sort of 50.00. Okay, when you look here, on the higher time frame, you can see that's the next major once we deal with 55 area, okay, that'll be the next major demand or major support or target area for the bears. Okay, so once again, a week filled with volatility, thanks again to Trump coming into play, making the markets as exciting as ever. Other than that, have a blessed and amazing week, and I'll catch you on the next video.